Sri Gurubhyo Namaha children. Welcome to our online class. Eklavya, Standard 12, Subject Economics, Monetary Economics, Lesson 5. In our last class, we have studied about what is monetary economics, the synopsis which we have seen, what we are going to learn in that monetary economics. We have talked about the introduction of monetary economics, the meaning of money, the meaning of definitions, and two important economists who have given the definitions for money, Walker and Crowther, and the evolution of money, how it has been evolved from barter system to cryptocurrency, that is metallic standard, first barter system, then metallic standard, then gold standard, then silver standard, then paper currency, then plastic money, then cryptocurrency. Now let us move on to the functions of money. The functions of money have been divided into four. Number one, primary functions. Number two, secondary functions. Number three, contingent functions. Number four, other functions. Under primary function, there are two divisions. Under secondary functions, there are three divisions. Under contingent functions, there are four divisions, and under other functions, there are three divisions. Let us go ahead by one. Under primary functions, there are two divisions, nothing but money as a medium of exchange, money as a measure of value, how it is functioning. Under secondary functions, money as a store of value, money as a standard of deferred payments, money as a means of transferring purchasing power. Under contingent functions, basis of the credit system, money facilitates distribution of national income. Money helps to equalize marginal utilities and marginal productivities. Money increases the productivity of capital. Under other functions, money helps to maintain the repayment capacity. Money represents generalized purchasing power, and money gives liquidity to capital. Let us go in detail about all these functions of money. First, primary functions. Under primary functions, there are two divisions. Number one, money as a medium of exchange. Number two, money as a measure of value. Money as a medium of exchange. This is considered as a basic function of the money. Money has the quality of general acceptability, and all changes take place in terms of money. An account of use of money, the transaction has now come to, it has to be divided into two parts. Number one, money is obtained through sale of goods or services. This is known as sale. Second one, money is obtained to buy the goods and services. This is known as purchase. So, one is sale and another one is purchase. Thus, in the modern exchange system, money acts as an intermediary in sales and purchases. So, medium of exchange, store of value, measure of value, standard of deferred payments, right? Money as a measure of value. The second important function of money is that it measures the value of goods and services. In other words, the prices of all goods and services are expressed in terms of money. Money is thus looked upon as a collective measure of value. Since all the values are expressed in terms of money, it is easier to determine the rate of exchange between various types of goods in the community. You can measure the value of money. That is second one. There are some pictures, for example, of medium of exchange, measure of value, store of value, and standard of deferred payments have been given over here. Secondary function. Money as a store of value. Savings done in terms of commodities were not permanent, but with the invention of money, this difficulty has now disappeared and savings are now done in terms of money. Money also serves as an excellent store of wealth as it can be easily converted into other marketable assets such as land, machinery, plant, etc. In secondary function, we are going to see the second function, money as a standard of deferred payments. Borrowing and lending were difficult problems under the barter system. In the absence of money, the borrowed amount could be returned only in terms of goods and services. But the modern money economy has greatly facilitated the borrowing and lending process. In other words, money can now acts as a standard of deferred payments. What do you mean by deferred payments? Whatever you are getting, you can pay the amount by postponing. Okay, that is deferred payments. In secondary function, third one is money as a means of transferring purchasing power. The field of exchange also went on extending with growing economic development. The exchange of goods is now extended to distant lands. It is therefore felt necessary to transfer purchasing power from one place to another. Contingent function. What is contingent function? It is dependent on what may happen. There are four functions in this. Let us see one by one. Number one, basis of credit system. Money is the basis of credit system. Business transactions are either in cash or on credit. For example, a depositor can make use of checks only when there are sufficient funds in his account. The commercial banks create credit on the basis of adequate cash reserves. That is basis of credit system. Number 2, under contingent functions. Money facilitates distribution of national income. The task of distribution of national income was exceedingly complex under the barter system, but the invention of money has now facilitated the distribution of income as rent, wage, interest, and profit. Will you please tell me what are all these sub factors of production? Rent, wage, interest, and profits are sub factors of production. In contingent function, let us see third one. Money helps to equalize marginal utilities and marginal productivities. Consumer can obtain maximum utility only if he incurs expenditure on various commodities in such a manner so as to equalize the marginal utilities occurring from them. What do you mean by occurring? This is a new word, increasing. Okay. Now, in equalizing these marginal utilities, money plays an important role because the prices of all commodities are expressed in money. Money also helps to equalize marginal productivities of various factors of production. What are factors of production? Land, labor, capital, and organization are factors of production. Sub-factors of production already we have seen in second contingent function: wage, rent, interest, and profit. Factors of production: land, labor, capital, and organization. In contingent function, let us say the fourth one. Money increases productivity of capital. Money is the most liquid form of capital. In other words, capital in the form of money can be put to any use. It is on account of this liquidity of money that the capital can be transferred from the less productive to the more productive uses. Okay, let us go ahead with other functions. Money helps to maintain a repayment capacity. Money possesses the quality of general acceptability. To maintain its repayment capacity, every firm has to keep assets in the form of liquid cash. The firm ensures its repayment capacity with money. Likewise, banks, insurance companies, and even governments have to keep some liquid money, that is cash, to maintain their repayment capacity. In other functions, second one, money represents generalized purchasing power. Purchasing power kept in terms of money can be put to any use. It is not necessary that money should be used only for the purpose for which it has been served. That means we can use it for anything. Number 3, in other functions, money gives liquidity to capital. Money is the most liquid form of capital. It can be put it into any use. Supply of money. Let us see the supply of money in our next class, children. Thank you, children. Have a nice day.